season, which means you've probably come across tax deductions and tax credits when you're filing your tax returns. At Dyneri, we're Ivy League trained and passionate about financial literacy. We have your back on all things finance and ultimately want you to have the tools to reach your financial goals. In this video, I am going to walk you through what deductions are, what credits are, and the differences between them. Quick disclaimer, this is not legal, tax, accounting, investment, or other professional advice. Please consult a CPA and do your individual research for your situation. So, the important thing to know about both deductions and credits is that they can reduce the amount of tax that you pay. I'll start with deductions. Deductions reduce the amount of income on which you pay taxes, which in turn can reduce the amount of tax you owe. The amount that a deduction reduces your tax liability depends on your income tax bracket. Let's look at the most common example out there. When you file your federal tax return, you will see something called the standard deduction. So let's say that in 2022, your income was $50,000. For a single person, your standard deduction would reduce your taxable income by $12,950, which was the standard deduction for the year. This means that your taxable income would now drop to $37,050. The amount of the standard deduction will vary depending on your filing status, meaning if you file as single, married filing, jointly married filing separately, or head of household. And although the standard deduction is fixed, there's also itemized deductions, and their amount varies by individual and by your income. Deductions are tricky. Nowadays, you only really benefit from most deductions to the extent that they exceed your standard deduction. This means that you can either take the higher of your standard deduction or your itemized deductions, but not both. According to the IRS, about 90% of taxpayers take the standard deduction. On the other hand, let's look at credits. Credits can reduce the amount of tax that you owe altogether. Unlike deductions, they are subtracted from the taxes that you owe, not the taxable income. So, if you qualify for a $1,000 credit, you will save that $1,000 credit on your tax bill. In most cases, a credit will not only lower your tax bill, but can also result in a refund. Let's look at a very common tax credit. You might have heard of the child tax credit. Most parents can get up to $2,000 for each dependent child under the age of 17. So which one is better, a tax credit or a deduction? All things equal, a tax credit will often save you more in taxes than a tax deduction. Why? Because credits reduce your dollar for dollar liability, while deductions lower your income tax that is subject to tax. So if your income was $30,000 last year and you took a $100 deduction, that means that you would not have to pay tax on this $100. This means that the deduction would save you $20 because we're assuming a 20% tax rate on that first $100. On the other hand, a $100 credit would reduce the amount of tax that you owe by $100. So let's say you owed $500 in taxes, now you would owe $400. Now, you might be wondering, what are some credits and deductions that you can claim? Here are some common credits, and here are some common deductions. What about if you contribute to a retirement account like an IRA, SEP IRA, or solo 401k? These can be deductible. However, if you made a contribution to an employer-sponsored retirement plan, that will not be deducted on your tax return since they have already accounted for that in your W-2. If you have a side hustle, work as an independent contractor, or own a small business, you can deduct a lot of the costs related to running and maintaining your business. You have access to deductions for your home office, self-employment taxes, supplies, equipment, depreciation, health and business insurance, utilities, and other things like that. Bottom line, if you qualify for a credit or deduction, this can really help you because both of them can reduce the amount of tax that you must pay and sometimes can result in a refund. I hope this helps. Don't forget to like this video if you found it valuable.